Hey everybody, so another piece of news that has come out, which I know has been floated around, and you probably already have opinions on it, is that 50-year mortgage. I think President Trump had made mention about opening up the options for a 50-year mortgage, and I just wanted to review that with you a little bit. I've read bits and pieces. I don't really know that I have an actual opinion on it. Yes, it does open up an additional possibility. No, it is not a requirement for you to get a 50-year mortgage. I am sure that if this comes fully to fruition, that you will still have the option of 15 and 30-year mortgages and some of the other bank products that a lot of lenders offer you. So with that being said, though, as we know, the 50-year mortgage proposal has the idea of it has been floated. It is probably not a game changer in the grand scheme of things, like I just mentioned. And there's a lot of criticism going back and forth as far as whether it's a good idea or a bad idea. So I have seen some statistics and examples where if you get a 15-year mortgage, usually the interest rates are a little bit better because you are not going to have the mortgage as long as a 30-year mortgage, right? But with a 50-year mortgage, then you can expect the same between a 30 and a 50-year mortgage, that the interest rates are probably going to be a little bit worse for a 50-year mortgage. But something else that I heard said it could drop your mortgage payments by a couple $100 every month. However, you also have to keep in mind that if you were to stay in your home for a true 50 years, then you would be paying a lot of interest on your property. So that could make your overall property purchase far more expensive than what you anticipated, even if it's saving you in the short term. So keep that in mind if you are considering a 50-year mortgage. One thing that I want you to be aware of is that 40-year fixed mortgages do actually exist, but they are very rare. The 30-year mortgage is our most common mortgage option out there, even compared to 15 years, which are pretty popular. However, I want you to keep in mind that if you opt for a 50-year mortgage, yes, you are still building equity in your home. You are just not building it as fast as you would in a 15 or 30-year mortgage. As far as housing affordability, there is a possibility that a 50-year mortgage could open up affordability options for those buyers who maybe really can't afford the monthly payment on a 30-year mortgage, but could, by dropping those monthly mortgage payments by a couple $100 each month. However, that has yet to be seen, so do not quote me on that. I know that there's a lot of back and forth as far as whether or not it's actually addressing affordability. Also, we are not the first country to even consider a 50-year mortgage. The UK actually considered it at one point a few years ago. However, one other thing to keep in mind is the fact that at 50 years, if you don't even buy a home till, let's say, you're in your 20s or 30s, then you'd be 70s or 80s before you're paying off that mortgage, if you were to stay in that exact same home. So with that being said, by the time we reach 70 years old, there's a good possibility that we will be retired on fixed income. A lot can happen. Also, with that being said, if you think about it, if you are a mover or not planning to stay in that home for 50 years, then there's a possibility that maybe a 50-year mortgage may work for you, because later on you can sell the home and move up or move down, whatever you need to do. However, again, going back to the idea of equity, how much money, if you were to sell your home, let's say in 10 or 20 years on a 50-year mortgage, how much equity would you have in that property that you could transfer to another property? So just some thoughts to keep in mind here. But we also want to keep in mind that as we're building equity, there's a good chance that your home is appreciating in value. So let's use this example that they show here. If you were to have a 6.8% interest rate for a $420,000 home with a 20% down payment, the home begins with $84,000 in equity. Because the loan amortizes very slowly over the 50-year term, only about $14,000 of principal would be paid down after 10 years, assuming that you sell it in 10 years. However, if home prices rise modestly, for instance, 2% per year, equity can still compound significantly. After 10 years, a homeowner with a 50-year mortgage could see their home appreciate from $420,000 at the time that they purchased it to over $512,000 by the time that they get ready to sell it. Even with limited principal paid down, their total equity could approach $190,000, which is still a real and significant source of wealth. So when could a 50-year mortgage make sense? For some buyers, the longer term might provide exactly the flexibility that they need. For example, first-time buyers who are stretching to enter the market could use the 50-year mortgage to get their feet in the door, reduce their payments, and refinance later once their income rises. Younger households might benefit the most, starting with smaller payments and using the appreciation to build their equity that funds future moves and upgrades. Also, high-cost markets could also benefit, as smaller monthly payments may help more renters transition into homeownership. But again, like I said, stretching the payments doesn't fix the housing shortage. So even if you were to be a home buyer looking to invest in property at the 50-year mortgage rate, it doesn't address the competition with the limited supply of inventory that we have on the market. So that's just going to actually increase competition between you and possibly another buyer. What we need is more inventory at the price points that match people's income. But the 50-year mortgage is still a longer path that can still lead to home ownership. Now, I want to address something else real fast. There also has been floated an idea of portability or assumption of the mortgage. So let's say that you refinanced or purchased a home during the pandemic and you had this really killer interest rate. If you can move that interest rate and that loan to your next home and continue on with your regular monthly payments or however they're going to factor all that in, that could be another opening that allows people to move. That could actually open up inventory for people selling because they know that they're not going to lose their lower interest rate that they got during the pandemic. So that's an option to actually increase affordability at the same time. Now, I did not come up with the idea of mortgage portability or assumption, so do not give me any credit for that. That's just something that I have heard and read about a couple of times. It is not being discussed as prolifically as the 50-year mortgage idea. So that's the breaking news for the day. Take care.